We're always told that expensive things take longer to sell. And it makes sense, right? I mean, a smaller pool of buyers should mean more time on the market. But in today's housing market, something really strange is happening. The most expensive homes, they're actually the ones selling the fastest. So let's figure out why.
So this is the central puzzle we're going to tackle today. How on earth is it possible that the priciest homes are the ones just flying off the market? It seems like a total paradox. Let's unpack it. All right, first up, let's talk about what I'm calling the expensive fast paradox. We all have this gut feeling about how markets are supposed to work. But what happens when the data comes along and throws a massive curveball at everything we think we know?
I mean, just think about it for a second. A multi-million-dollar mansion should have way fewer potential buyers than, say, a starter home. It should just sit there longer, right? Waiting for that one perfect, super wealthy buyer to come along. That's the logic. But right now, out in the real world, the exact opposite is happening.
Okay, this is where it gets really, really interesting. We're going to move past all the assumptions and just look at the hard numbers. It's time to decode the data and see what's actually going on out there.
But before we dive into those numbers, it's super important we're all on the same page with our main metric here, median days on market. Now, we use the median for a reason. It gives us the most typical experience for a home sale. It's not going to get all skewed by that one mansion that sits on the market for 2 years or some bargain that sells in an hour. It really is the solid middle ground.
Okay, so here it is. This is the data that just flips everything on its head. Just look at this table. Let's start at the bottom, with homes in that $300,000 to $500,000 range. They take almost 83 days to sell. Now just watch what happens as the price goes up. The days on the market actually go down, all the way to the very top, where homes over $1.3 million are selling in under 60 days. It is the complete and total opposite of what you would expect. And get this, the difference here is pretty significant. That upper middle tier, it's selling a full 8 days faster than the lower tier. In the world of real estate, 8 days is an eternity. This proves this isn't some statistical fluke. So what is really going on?
Well, that brings us to the core explanation. And the answer isn't what you might think. It's not about luxury or fancy features. No, it's about something much more fundamental, the engine of purchasing power.
And this right here is the key. The secret isn't some fancy granite countertop or a swimming pool. It's about money. Specifically, it's about markets where you have a whole bunch of people with a whole lot of money to spend. The speed of the sale is being determined by the buyer's bank accounts, not the seller's price tag.
So what does concentrated purchasing power actually mean in the real world? Well, it's really a combo of these 4 things. First, buyers in these pricier metro areas, they just tend to have higher incomes. They've also often got a ton of equity built up from their last home. This makes them way more resilient when mortgage rates start to swing around. And on top of all that, you've got even tighter supply in these areas, which just fuels the competition.
Now, let's flip this over and look at the other side of the coin. Because to really understand why the top of the market is moving so fast, you have to understand why the middle of the market is struggling to keep up. You basically have 2 completely different worlds. On one side, you've got your buyers in the expensive markets. For them, yeah, a mortgage rate hike is annoying, sure, but it's probably not going to stop them from buying the house. But on the other side, you have the mid-market buyers. They are often maxing out their budget. For them, that exact same rate hike can be a complete deal breaker.
And that is exactly why those homes sit on the market longer. A small little jump in interest rates suddenly makes the monthly payment impossible. The bidding wars just evaporate. Buyers take a step back. And all of a sudden, a house that seemed affordable is now completely out of reach for the very people it was priced for.
So when you pull this all together, you start to see a new rule emerging for how we should think about the housing market's speed. It's a fundamental shift in what's actually driving demand. And honestly, the source material boils it down to this single, powerful idea. It says you can forget the price tag for a minute. The real indicator of how fast a market moves is the financial strength of the buyers in that market. Their balance sheets, that's the new engine.
So let's just quickly recap the 3 big takeaways from all this. Number 1, purchasing power is now the main thing shaping housing demand. 2, this means the high-price markets can stay incredibly active because they're fueled by wealthy buyers and really low inventory. And 3, the real slowdown, the real struggle is happening right there in the middle of the market, which is just the most vulnerable to all these affordability problems.
You know, this all leads to one really big, important question. If it's the buyer's wealth, not the home's price, that's calling the shots, what does that mean for the future of affordability in general? It kind of paints a picture of a market that's splitting in 2. You have the haves and the have-nots. And that's definitely something to think about. Thanks for joining me.